this market report is about mortgage rates. We kind of discuss what's driving them and what's impacting them on a daily basis. We like to kind of cover if it's a trend going upwards or downwards, if we're going kind of unchanged. Uh, we don't get into rate quotes primarily because there's just too many variables. We got different loan programs that you can almost create a different video in itself. There's plenty of other sites for that type of thing. If you guys need that type of thing, please just contact me, and we'll be more than happy to give you some rate quotes based on your individual needs versus just a general thing that we put out there. But anyways, a little bit about myself. I am a loan officer. I do work with a national lender. So again, if you guys need help with refinances or purchases, we'd be more than happy to help you out with that. If you guys got questions about mortgage programs or even about uh, interest rates, please feel free to reach out as well. We love to talk about these type of things. So without further ado, let's jump into this economic report and start with the economic data being reported today. The second jobs data we're going to receive that we get every week is the initial jobless claims. So last week's number came in at 553,000. However, that did get revised higher to 590,000. Forecast for this week was at 540,000, and it blew that out to 498,000. So all these are actually very good. We've been seeing a decrease in this, and this is a pretty substantial decrease. We were in like the 700s for a little bit. Now we dropped down to the fives. Now potentially the fours. Something to kind of watch for is these challenger layoffs. This is actually good news here. Challenger layoffs are announced layoffs, so that dropped from about 30 million to down about 22 million. So good numbers there that we're having fewer layoffs. However, this is something to kind of watch for is this continued claims. We went from a revision of 3.66 million that was revised slightly lower to 3.653 million. However, we increased to 3.69 million. So instead of going downwards, we actually went up a little bit. People reapplying for continuing benefits here. So those two aren't really as important, but I like to kind of touch on some background information behind some of these jobs data that we can kind of look at and kind of gauge where things really are at. Because you can't get the whole story looking at certain data here, and some of these other ones kind of give some more details of what we should be looking at. We got the second readings of these labor cost and productivity data. So we had our initial one last month. We get another look at it this month, and then the final numbers will come out in June. So labor costs for the first quarter initially came in at 6%. Well, I'm sorry, this is actually this was for the fourth quarter. Fourth quarter was at 6%. However, it was revised lower down to 5.6%. Forecast was calling for a negative or drop of 0.8%, and it dropped down to 0.3%. So at least that came down. That could be less inflationary data, inflation to help us out a little bit. So that could be good. But however, productivity, we got some good numbers here. In the fourth quarter, initially came in at a drop of 4.2%. However, it was revised a little bit higher to being down by 3.8%. However, first quarter is being forecast at a plus 4.3%, and it came in a little hotter at 5.4%. So overall, pretty good numbers here. Labor costs were down, productivity was up, and we got initial jobless claims was down. So overall, very good data to look at in today's numbers here. Now tomorrow we'll get the Bureau of Labor Statistics data, the non-farm payrolls. They're expecting almost a million new jobs created on tomorrow. So it'll be interesting to see what we actually get tomorrow. So fingers crossed that we get a good report. May not be as good for bonds, but however, for the health of the overall economy, that's kind of what we're looking for. So let's jump ahead to the headline news. Stocks are a little mixed today. We got the technology stocks in the Nasdaq are the ones that kind of bringing their only loan index that's in negative territory. However, investors are kind of looking at different aspects of stocks where they're at. They're in a very over bought position, and they're looking for any reason to keep continuing rising. So at some point, they're going to run out of steam and probably go the opposite direction for more of a correction purpose. They are again, the economy is picking up a little bit, but they don't know how much, and of course, inflation. So they are looking at different avenues. Now we have a few Fed speakers out today. This week we've had a couple. They kind of after Janet Yellen's interview on Monday that was released. It was basically they've kind of stood their stance that they're going to maintain where they're currently at, even though it's a complete 180 from what Janet Yellen is saying. So it was they're trying to calm the markets to let them know that hey, we're going to keep doing what we're currently doing, and we're not going to steer off of that current path right now. We will give basically they're telling them that they'll give you a clear explanation and give you a timeline as to when things go. So as of right now, things are it's easing the markets a little bit for the most part where things are at. So let's jump ahead, see what's looking at in the mortgage markets. We're just down 3 basis points, but as you can see, we're steadily climbing up here, which is great news here because every time we tested this, we get pushed down. Even a while back here when we were in this range, we kept getting pushed down, and we even fell down this range. We're steadily kind of climbing upwards, working our way up towards this 100-day moving average. We're down only about 3 basis points, but yesterday we did close up 9 basis points, which is good news here. If we can keep working this up, we may see some improvement in our pricing, but right as of yet, we're still unchanged levels right now. But again, the day's still early. We got plenty of time in the markets that could eventually work its way upwards. So again, overall, not bad where we're at. We're in this no man's land. We're between the 25-day moving average and this 50-day moving average. Yields are down a little bit. We're down to about just under 1.58 right now, even kind of touching 1.57-ish. As you can see, we get the star effect, which is kind of between no man's land here, 50-day moving average, and this next technical level here. But yields have been pushed lower, which is good news for those who are in the market to buy or refinance. So this is kind of helping out rates a little bit as a result. So, all right, folks, I hope this is helpful for you guys. Again, mortgage rates should be unchanged currently, but we are seeing some steady progress with it. And if you guys got any questions, please feel free to reach out anytime. Be more than happy to help you guys out. Otherwise, we'll see you in tomorrow's video. Have a great rest of your day. Bye-bye.